Good afternoon, Bob Trade Genius. The 14th of June, Fed Day, and so I'm going to go through the charts here. Very very interesting day, and definitely an inflection day. And so I think the move that will probably we'll see reverse sooner than later. I know everybody's excited about the banks because they're going to get more free money from you, from me, from the corporations, and from the Treasury because they're going to obviously charge more interest, but they're not going to be charged more for their money from the Fed. And make no mistake, this is the only reason why the Federal Reserve raised interest rates. There is no other reason. The banks are in a death mode, and if they did not have the Federal Reserve pumping them all this free interest revenue, they'd be gone already. The 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 loan books are collapsing. The industries that need lending are getting eviscerated, and people are basically going broke. So the only lifeline they have is the Fed, and that's why they're here. And people just myopically buy this stuff. I stay away just to watch it, but this is going to be it's going to be an incredible trade because once they report earnings that are awful, they won't be able to hold up, especially when they have to start charging off a lot of these auto loans, and then basically they're not doing any mortgages at all. I mean, every time I go in the bank now, I literally am accosted by the tellers and by everybody about, hey, you need to talk to one of our mortgage guys about getting a home equity line of credit, and they're trying to get people to take loans, and all I have is the Fed. So it'll be interesting to watch. But this is the game, and so we'll see if there's any follow through. I think the news is already out. This is prep. Now we hear we're flat on the day, and the Fed said they're going to do one more raise. I'd be surprised if they did. We'll be in a recession by then. And then here's the VIX. VIX didn't really react, much at all. Well, 0.5%. XIV was up, which is always amazing to me. But it's on the floor scraping, and I think it looks like it's a pioneer shot for some long volatility trades coming up, especially if the large cap Nasdaq stocks start to roll over. Because one thing you have to bear in mind, all these companies borrow money to buy back their shares because they're using up all their cash flow to do this, and it's going to cost them more to do it. And they have loans that are already outstanding because they're not investing in the businesses; they're just investing in their stock price. And now that all just became more expensive, and so you're going to start seeing some of that get blown up. You're going to start to see some equity swaps where they're going to pay down debt but offer more shares, and then that's going to help sink the market. GDX, um, you know, the dollar popped and GDX fell. We bought Nugget puts ahead of the meeting. I did it not because I was so prescient about what's going to happen. Although we had a sell signal on it, I was just worried about my long minor position I'm keeping long term. I didn't want to take too much of a hit on that, although I knew it was probably coming. And so, anyway, I did it. I took it off, bought it at 48 cents. We took it off at 115. So, made about 120% in about 2 hours. So we'll see if we have follow through on that, or if that was just a one day reaction for the Fed, because they did pump this up ahead of the meeting here, and so we probably got a reaction off of sell the news reaction. But longer term, the Fed's going to have to do QE sooner than later because there's no way they're going to take their balance sheet back. They'll cause a depression, and they know it. It's all theater. Here's SPY. Hey, SPY wasn't positive, so how about that? So we'll see the follow through on that. Money flow went down to oversold. The intermediate Stokes are saying that this should be a buy to dip, but I think we have to let it play out for a day or two. Here's the Qs. This is what I've been trading of late. So, the we have puts on, and I've been day trading NQ too. So we caught this move. We sold puts against this move. We took the sold puts off for this move, put them back on for Friday. So we're running a calendar essentially, and so just harvesting profit as I can. But my view here is that this should be a measured move. So right from here to here is 7 points, and 141 down to 135, 136, I think is coming. And so just have to keep that in mind. What blows that theory up is if we get back over 141. Basically, if we get back to this morning's high, my theory's wrong. But in the meantime, I'm going to be selling rips on futures, with my signal, and then I'm going to be running a put and taking the sold puts off as I need to, so I can maximize profit on the option trade. And I'm posting those in. If you're an advanced ETF client, you get those. So you have to follow along, because I may post a couple of a day, just so we can just grind it out. Because I think volatility, at least in the Qs, is going to pick up substantially. We talked volatility. My signal says here, as soon as this thing turns up, you should buy a long vol trade. They haven't been really long. They're like unicorns. But they're always worth taking a shot, because you never know what the one that's going to blow higher. So probably a bear flag here on XLE, but we'll have to wait and see. This is still resetting. Could be one more move down, and then I think we'll have a chance for a long trade in it. IWM is holding up because of basically the banks, but everything else in the small cap world is just doing okay. And but from the chart standpoint, is that love for it to come back down to here. I'm short. We have calendars on this one as well, and I'm looking for it just to stair step down. I know a lot of people are looking for this thing to go to all-time highs, rotation from large cap to small cap is the only play. But the bonds are being bid too now, so we'll see about how well the small caps take off here. They're trying to create this thing. It looks like a early cycle economic move. Banks and small caps in oil, really. We're late stage right now, GDP, and so I think everything has been truncated. So we'll see how fast this move gets reversed, because the consumer is dead, and it's going to just ripple through these earnings reports, and companies are going to start laying off again. It's not a pretty sight. This is my Momo proxy of the day, and they basically kept it flat. It was flying around there a little bit for a while, but I think this was a death move, and now once it gets below here, then it can go down in earnest, because it's a failure. If it gets up here, then hey, it's going higher. Here's Apple. Apple wasn't buying any of this today, and Apple will suck the market down. It's the largest market cap stock, at least according to my charts. We talked about Nugget, and this is 10% below its volume weighted average price. So I think it got shellacked here pretty good, and I'm probably seeing maybe a bounce will come from this, but not sure beyond that until the market smells failure of Fed's policies. All GDXJ did was come back down to the VWAP, so that's interesting to me. We'll see if it falls through tomorrow. GLD, crazy move there, but again, everybody's acting like gold is falling off a cliff. It's still rising. So I just think the emperor has no clothes here, and people are going to start moving more and more into safety things. XIV, wow, it was up today. What a shocker. UCO, So the only trade that kind of blew up on me today, and it wasn't when I posted for the stock signals, but I took a shot. I took a shot at the oil report. Usually they reverse the move from yesterday, and yesterday sold it down, and so I was positioning myself to catch a rebound on it, and they sold it down some more. So uh, I'm I'm stuck with some underwater oil futures, and so I layered in. You know, that's the one thing to do. I tell people all the time, don't be 100% invested. You need maneuvering room in case you're wrong or you do something stupid. And so like I have plenty of cash, and so I'm in a position now where even if I have three contracts on now, I could buy more, a lot more, to position myself for profit. So that's one thing you have to think about. And some of the other traders that followed me, and some of them did it in calls, and some of them bought shares in UCO, is that they did the same thing. Oil now is on major support. It hit its yearly pivot, and so I'm looking for at least a bounce out of this. And all I need for me to get back to even on the oil trade is just uh, for to move back into the mid 45s, and I can walk out of the trade because I was able to scale. And that's just a lesson you guys need to take. A lot of people just load up hard, either when they get one of my signals or when they see a trade they like. I never do. I always give myself room to be wrong. If I like the story, I'll add to, and then you can scale out. But just anyway, I just want to share that with you. So had nothing to do with the day trading money machine. It was totally a shot for me to see if I could you know grab some free money, and today I gave back lunch money, and so but the money machine killed it on the Qs today. It was textbook. So oil did nothing, absolutely nothing after the report. See that? I mean, it was just dead. So, but it got down to the pivot and held. And then my only thing is, if it falls like 1% below the pivot, then we have something bigger going on here, and I'll just have to admit defeat. But if not, I'm just gonna stay and see if I can work my way right out of the trade. Stay tuned. There's Dust. What a move on Dust, and uh, I'll fade this move with Dust puts as soon as I see the MF roll over again. This thing has been a nice trade, especially when these things line up. So that's what I look for when I short the ultras. I look for the my intermediate trend signal to be given way, and or at least be definitely overbought, and have money flow start to roll over. And as soon as it does, it just makes it just easy money for any of the ultras. That's what I'm always scanning for. Yeah, here's Tech. Looks like it's rolling over to me, so we'll see what happens. Here's Silver. Silver got whacked. Talk small cap, talk gold. The SQQs were in them. 3180 is the position. A little bit of recovery today from yesterday. And like I said, I'm very, very, very bearish on large cap tech. And when people start bailing out of that, a lot of these people are on margin too. So people think, oh, they'll just rotate to something else. If it starts going down a couple percentage, people are getting their margin vaporized. They're not necessarily taking it as cash and moving it into something else. Especially if they start getting burned on their positions, they'll think twice. SDS just basically, slow grind, but I'm telling you, when this thing goes, it's going to go. There's just nothing underneath these indices at all. They're fake numbers, and at some point, the calculations catch up. When it popped over, I knew I didn't want to buy miners ahead of the meeting, and I'm so glad I didn't. But this is setting up. I'll be ready to start buying AG here again pretty soon. And real estate's telling me the interest rates are going down, at least for what they have to borrow. And the 10-year was down today. I'll get to that in a minute. So the Fed is just flattening the yield curve, and she's almost trying to force a recession. and there's oil. And like I said, I think it's going to push back higher. It's pretty oversold at this point, and it's been grinding down. And so this is not my information, but I've been told by a number of sources, oil under 45 causes tremendous stress in the banking and and in the financing circles, and it'll get defended. So we'll just see if that's a true statement. But if it breaks down from here, I think the market goes with it because it's going to cause stress on the bankers, and then people want to protect their positions, so they'll start shorting either oil again or they'll short SPY like they did in 2014 to go along with it. UNG had an early bounce. I was looking at it for a futures trade. I didn't like it yet, but I'm definitely ready to go long natural gas futures. So stay tuned. ERX, we talked about that. Talked small cap. The Amazon stock was flat today. Talked banks. Mosaic. Basically, it's a dollar move, so it was telegraphing a higher dollar. So now I know when the dollar goes, MOS will be the play. XBI, just a funding source of late. It's definitely overbought. It broke through my dark shadow here, so this is invalidated now. Now I'm just looking for it as a higher overbought area to see if I get shorted again. But pretty good recovery in it. Talk to SPY. Okay, so I have Wheaton Precious Metals, so I have 3,000 shares now, and my average on those 3,000 shares right now is about 2040, and I have sold 20 puts and I've sold 1950 puts. So in the event that both them get put to me, then I'll have Silver Wheaton at probably around $20, which is where I want it to own, and then I'm gonna start turning it on as a cash machine, ATM for myself. So we're gonna build it out to about 5,000 shares, and then we're just gonna go ahead and start selling calls against it every day. And I have room if I want to sell some more puts to actually put on a couple more thousand shares. I'm not sure I want to do that yet. I want to see kind of how things play out, but that's my plan. So I'll go out of the money, in the money. It doesn't really matter to me. But then I'm starting to harvest this trade, and I'm looking for personally to draw out 35 to 40% a year off this position. Well, I'll see if I can do it. Stay tuned. Okay, there's oil, way out of bounds. I think we're going to be close to putting a put on SCO here pretty soon. Money flow rolled over, but it's the end of the day, so sometimes it gets a little quirky. And I'm going to wait for this to get over, embedded or roll over. And probably today's Wednesday, maybe Friday, going into Monday, take a shot at SCO puts. There's a dollar. That's a big move there. May get up to here, but I think they're going to find out all Yellen stuff's pretty vacuous. Banks, TWM, we're in it, and like I said, it's a longer term hold for me, and so we're going to keep hitting it. And I think once the banks, people figure out the banks have nothing there, TWM is going to roll pretty good. Drip's getting to a point here where little head and shoulders pattern may be forming here, so be ready to short this one too in a couple days. Here's Boyle, FXY. This is what helped drive the SPY to almost zero today, because we can't have freely functioning markets anymore. There's DBA, the dollar pushing that down, mostly because of sugar. And I'm in a full position here. It just missed me here, taking off half. I always chastise people, don't be so dogmatic, but I had a 2020 on it, and couldn't watch it. They just missed and rolled over. Thought for sure it was going to push higher, but c'est la vie. It's a long-term position, and it's going to come back because food prices are going to go way up this year. Okay, the one I'm following. So it pushed up to the 100-day and failed. Not surprised. That usually happens the first time you get a touch of the 100-day. Now, when it does the next buy signal here on money flow, I'm probably going to take a shot at this the first time. Whoops, sorry. And then here's sugar. So I think that caused some of the grief in DBA today. I don't know what cocoa did. It's also part of it too. I know the grains were actually fairly good today. They're flat. So wheat was flat. Back to natural gas. We're going to be shorting cold here pretty soon too. It's pretty embedded, but it's going to be a good trade. And I think when it goes, we'll get $5 or $6 out of cold. There's Joe. Okay, so Joe pushed down. This is pretty good support here. We're at a point with a lot of these prices for ags that farmers can't afford to plant or can't afford to maintain, and it's going to take production out. And when production comes out in ags, it doesn't just come out for, like a steel plant where they can lay people off and bring them back next week. If you start ripping crop out, or you start having plants not be productive because you're not putting the inputs in, it takes a year or 2 years to start recovering. So if we start losing production because of price, and make no mistake, I read all the time, farmers are under stress because the pricing's been so low, and the input prices have gone up, and so I think it's going to cause issues here that'll eventually support the ags, and we're going to see it in wheat. We're already seeing it in wheat because production got crushed for the winter wheat crop. So there's JJG. We took half off. Now we'll just let it come back down again. As soon as the MF turns up, I'll buy back again and rinse and repeat. We got our average down to 2750 area now, and like I said, we're just going to do this thing until it breaks out of the range, and then we'll sit on it long. SALJ, so I stayed away. Massacre. Corn, that's what didn't help JJG today. Biotech, real estate. This is their tech look. You got VVIX here. They pushed it down, but it still was a positive on the day. The VIX was up for the day. And this is the thing, so we have a 10-year at 2.13%. This does not scream inflation to me, and it does not scream early cycle. What this tells me is that the smart money is hiding already, and the dumb money is going to get their asses handed to them. And just so, whenever the hedge fund guys or the bankers feel they got enough of their clients' money or their money safely out, they're going to open the trap door. And these guys are already positioning themselves in bonds. And that's it. So, great day in some respects, and